Hello, everyone. So today we are talking about stop trying to pick the perfect stock. And so I'm doing something different today. I'm going live on both YouTube and Instagram. So bear with me as I'm trying to multitask. So today's topic is really fitting because of what is happening in the stock market right now. As we have seen in the last few months, the stock market has taken a hit due to tariffs, the current administration, and everything else in between. And so I think a lot of people are losing confidence in the market, and they're also questioning their current investments. And so I want to focus on that topic today because while many people are panicking and panic selling or avoiding the market, now is a great time to kind of lean in and buy stocks at a much cheaper price. So we need to kind of change our mindset when we are thinking about investing. Hey, Shantoya, welcome, welcome. Thank you for joining. So, the first thing I would recommend is we have to stop panicking. While I know it feels natural to panic because you can't help it, right? The mainstream media is showing so much bad press, right? Everything is doom and gloom. The Dow is down, 900 points, and the S&P is down 1,000 points, right? Nothing good is happening, but we can't let that information deter us from investing because now is a good time to buy stocks. And so I like to compare what is happening right now. Hey, Sapphire Diamond. To having a Black Friday sale. So when Black Friday rolls around, we all want something at a good price. We don't want to pay full price, right? We want a good deal. And so with the stock market, you have to look at it in the same fashion. So when the stock market is down and it has taken a hit, that is the opportunity to invest more. But people tend to do the opposite. They start panic selling. They're like, oh my goodness, I've lost so much money. I need to stop the hemorrhaging and just take the money off of the table. And what's going to happen then, once the market rebounds, and it will rebound, you now have missed out on the opportunity to make more money. And we've had a really good example in the last few years, right? We have COVID. So during the pandemic, the stock market tanked, right? The world was in shambles. People were dying. We were quarantining in place. Businesses had to close. Many of us were out of work. There was a lot, right? And that was just 5 years ago. And so at that time, the same habits were happening then too. People were panic selling. We had no idea what was going to happen in the near future. What would our new normal be? And so at that time, people who were selling their investments missed out on the money once the market rebounded. And so if you look at the last 5 years, the S&P specifically has doubled in value again in just 5 years. But if you had no money in the market, you didn't benefit from it. So we have to kind of go against our natural inclination to panic, and you need to kind of be level headed at all times. Now, hey, do say welcome, welcome. Hey, Corey Love, long time no see. So we have to be level headed when it comes to investing. You can't let this drive your decisions. You have to use this. You have to be strategic. And I know it's easier said than done because when it comes to money, it causes a lot of emotions, right? It causes you anxiety. It can cause you fear. It can cause you excitement, right? There's so many things tied to money. So to not feel anything wouldn't be, really, you really can't not feel anything. But you can't let those feelings drive how you invest or don't invest your money. You have to kind of take a pause and see what's happening before you make that investment decision. But what's happening is so many people have this knee jerk reaction and they're just selling because, oh my God, I've lost money. Let me sell my investments. When truthfully, you can sell your investments, but it's the why that becomes problematic. Are you selling because the sky is falling, or are you selling because this investment no longer serves me? Right? Those are two very different narratives. One is more emotional, the other one is more strategic. And so this is where you have to put your emotion to the side aside and make strategic decisions when it comes to your investments. So you want to do the opposite of what everyone else is doing. While everyone else is panic selling and they're avoiding the market, now could be your time to buy stocks at a really good price. There are some stocks that are down 30, 40, 50%. So if you believe in those companies and you believe they will rebound, this is a good time to get them at a much cheaper price. But for some reason, we as human beings tend to only want to invest when things are good, right? And when things are good, you're paying a premium for those investments. And so you have to look at it from that lens versus the other way around. And so, leading to my next point, what is happening right now? A lot of it is out of our control, right? We're kind of just sitting back and watching the things happen around us. And we are in unprecedented times once again. But you need to look at it as, well, how can I use this and use it towards my advantage? And that is how you will be successful as an investor in any situation. While there are many bad things happening right now, I can't ignore that. But while that is happening, what else can you do to make a negative into a positive? And so that is kind of how I'm operating right now in this state of the economy and the world. And so you want to come out of this, more financially stable or to have more net worth. And so this is why really being level headed, being strategic is going to pay off. If you give into those emotions, you will find yourself missing out on the opportunity to make money. And this is how the rich continue to get richer and the poor tend to get poorer. And the biggest difference, besides how much money they have, is their strategy and their knowledge base, right? So the more you understand about investing and the stock market, the more you can understand what is happening around you right now. But more importantly, you can use this time and use it to your advantage. And so this kind of goes back to my first point of not panicking and staying level headed. So the third point I did want to focus on tonight is, this is why educating yourself is super important. Doesn't matter where you went to school, what your degree is in. If you don't have a degree, everyone can learn about investing. Now, of course, there are levels to this, right? You have your beginners, your intermediates, your experts, right? And everyone else who's kind of in between those levels. But wherever you are in that tier, there's always something new to learn. I don't care how long you've been investing. I don't care how many degrees you have. I don't care what your expertise is. There is always, and I mean always, something to learn. And so this is where you want to meet yourself where you are and figure out, well, what can I focus on right now? Maybe I can't focus on a course, right? Maybe I can buy an ebook. I happen to have one. Check out the link in my bio. Or maybe I can listen to a podcast. I have one of those too. Check out the link in my bio. And so you want to meet yourself where you are and start learning. And you can do it in bite-sized pieces. You don't have to conquer the whole realm of investing. Where's my water? Is my water back here? It's not. Excuse me, guys. Oh, hold on a second. My water fell. Don't know how that happened. Excuse me for 1 second. Only you know how you prefer to learn. Maybe it is an audiobook. Maybe it is a podcast. Maybe it's an actual course. Maybe it's an ebook. Whatever it is, meet yourself where you are and start doing it one step at a time. You don't have to know every single terminology. You don't have to understand all of the graphs and charts, right? You just need to know the basics and you build up from there. And so investing can be as simple or as complicated as you want it to be. It's just like that. So if you don't have a lot of time and you really are stretched, right, this might mean you buy a simple ebook, a few pages, you take that, you learn that information, and you're also going to learn by practice. As you begin making actual investments and you're watching your portfolio, you see how things flow. you will learn some things, right? And so experience also will help you learn along the way. And so I need us to all to kind of stop being intimidated by investing, because really it's only going to help you in the long run. And the longer you take to get started, that's just a missed opportunity to make money. And one thing I love to say, and if you've been following me for a while, you know I say this a lot: you need to do things today that future you is going to thank you for, whatever that might be. If it means opening that 401k account and contributing 1% to your portfolio, feel free to do that. If it means increasing your 401k contribution, go ahead and do that. If it means opening a simple Roth IRA or a traditional IRA and putting in $25 in every week, you can do that too, right? So there's so many ways to get into the market. And that's the other great thing about investing in the stock market. It's easily accessible. You don't need thousands of dollars to invest. You can start with whatever budget you have and just build up from there. So if you only have $20 right now to put into the market, do that. It's better than zero. And I think that's the other thing we have to kind of have that mindset shift on, is you need to start with where you are and do what you can with what you have. Hey, Nehemiah, welcome, welcome. We have to not feel I need thousands or hundreds of dollars to invest. Now it's nice to have that kind of money, right? But you really can start with a smaller budget. It doesn't matter how small, it's better than zero. And that we have to lean in on that. Every dollar you can put away today, future you is going to benefit from that. And I always compare investing to losing weight. I say this like every single year. When you are on your weight loss journey, like I am right now, when you lose that first 5 pounds, that first 10 pounds, 15, you see the progress and you want to keep that momentum going. And so you are going to do the things you need to do to see more results. And so with investing and also saving, it works the same way. So I'm on YouTube and Instagram. So if I'm looking at the camera, I have two cameras going on right now. So I'm trying to like multitask right now. So you have to, so as I was saying, when you make the progress, and when it comes to investing, when you see your balance begin to grow, you tend to feel more motivated to keep going and to add more money, right? And so, but with that being said, though, you should never overestimate how much you can afford to invest. I see people that do that a lot. They tend to overcommit and underdeliver. So you may say, "Oh, I can do, $500 a month," and then it gets to month 3, 4, or 5, and then you realize, "Ooh, I actually need to take that money out because I have things to pay." So we don't want to do that either. So you really want to start small and build up to see what you can realistically invest. So to kind of bring it home to the point of tonight's live, and that is there's no such thing as a perfect stock. And we kind of have to really wrap our minds around that, because if you're looking for one, it doesn't exist. Now, what does exist is finding the right balance of stocks to add to your portfolio. And that does exist. And the reason why a perfect stock doesn't exist is every company has highs, they have lows, and their stocks move the same way. So you'll have times where Apple stock is high, it's doing great. You have times where their stock takes a hit and their sales are and their sales are down. That's the natural ebb and flow of being in business, and that's the natural flow of the stock market. But what is going to be great for you is to invest in one company that you actually understand what they do, what they make, what they sell. Maybe you're looking for companies that pay dividends. That's great. That can be an income stream. But you really need to make sure you are doing research before you invest in a company. And that's the other part that is super important. Too many people are investing either on name recognition, from a random recommendation, or they're kind of just investing because, and that's it, right? And so that is not how we should approach investing. We need to approach from a place of, you've worked really hard for this money. Figure out if this company is a right fit before you hand your money to them. And I always use this analogy of looking for a job. So when you're looking for a job, no one just hands you the job, right? Hey, iCandy, welcome, welcome. They put you through a vetting process before they give you the job, right? So you'll, submit your resume, submit the application, you'll do a couple of screenings. If you pass that set of vetting process, you'll then move on to interviews. You might do a few rounds of interviews. If you pass that, they then will, ask for references, credit check, background check, and then they hand you the job, right? And so this is how companies vet you as a candidate before they give you the job offer. So you as an investor need to approach investing in the very same fashion. What metrics are important to you that a company has to meet the requirements before you buy the stock? And it could be whatever you want. You could say they need to have X amount of revenue every single year. They need to pay dividends. They need to have X amount of cash on their balance sheet, right? The metrics that you care about, it could be anything. It could be just one thing. It could be five things. Again, investing can be as simple or as complicated as you want it to be. But I really want to urge all of you to really vet these companies before you invest in them. I have spoken to so many people who have stocks in their portfolios and they have no idea why they bought them. They're like, well, my sister gave me this recommendation, or my coworker was talking about it and I thought it was a good fit. Or truthfully, I don't know why I bought it. I can't even tell you. That's a scary thing because you have given this money you've given this company your hard earned money and you're literally hoping for the best, right? And so you see how crazy that sounds. So again, we need to break out of that habit and find ways to do a little bit of research before you invest in a company. Now, one resource that I like to use is Yahoo Finance. Their app and website are so user friendly. They're phenomenal. This is not sponsored, by the way, but they have great tools that you can use to research a company. They show you their financial statements, the P&L statement. They show you the dividend yield. They'll show you expense ratio, meaning how much that stock or index fund charges for expenses. They show you the 52-week range. There's so much data in Yahoo Finance, and it's all in the app. So easy. And again, you do it on your phone, on your laptop, whatever, but I recommend using them as a resource to do your research. Now, again, you can make it as simple or as complicated as you want it to be. But the whole point is make sure you're doing some kind of research before you invest in a company. Now, you can have a piece of your portfolio where you are just investing and taking a chance. You can do that, right? So you could say, out of my 100% of my portfolio, maybe 5% or 10% are riskier investments. You can definitely do that, but don't make it your entire portfolio. We don't want to do that, particularly if you are not an expert when it comes to investing. If you're kind of more of a beginner or a novice, you want to kind of scale it back to find solid investments that, one, again, companies you understand what they do, what they sell, what they make. And two, you've done some kind of research to understand their financials, their performance, something, Hey, GMS Jam, and hey, Darlie, welcome. So we're talking about stop trying to pick the perfect stock. And so tonight's topic was inspired by what is going on in the stock market right now. People are panicking, they're panic selling, and people are so fixated on trying to find the perfect stock when truthfully, one doesn't exist. It really comes down to finding the right balance of stocks to add to your portfolio. And also, I think it's also important to keep a pulse of what's happening to those investments. And a perfect example is Walgreens. So I recall investing seriously into Walgreens during the pandemic. I noticed that their stock price was a little bit cheaper than CVS, but their dividend yield was a bit higher. So I was like, oh, Walgreens seems like a really good investment. Well, in a short 5 years, Walgreens has fallen from grace, right? So they are losing money. Revenue is down. They're being bought out by a private equity firm at the end of this year. And the stock went from being well into the $40 and $50 range to now it's like $10 per share. So a lot has happened with Walgreens in the last 5 years. Now, Walgreens in itself, they are problematic, right? They haven't diversified their revenue streams. But the industry, the pharmacy industry as a whole, is struggling. So you do see companies like CVS and Rite Aid also having tough times. But CVS, for example, I mentioned in this video a couple of days ago, they have found ways to diversify their revenue stream. So they don't only focus on prescriptions, they're leaning in on the health services space. So they have their minute clinics where you can go into the pharmacy and get shots and injections, right? They also acquired Aetna a few years ago. Aetna, of course, is a healthcare provider. So this is how they are keeping themselves afloat, truthfully. It's not the prescription side of the house. It's not. It's the health services side. And so this is why it's important to really just keep a pulse of what's going on with these companies. Now, I know it can be time consuming, and many folks like to kind of set it and forget it when it comes to their investments, but you need to do some kind of checkup on a regular basis. So I recommend checking your portfolios at least once a quarter. If you can do it once a month, I would say that's more ideal, but once a quarter really should be the cadence in which you're checking on your money. But a lot of people don't do that, right? They kind of just are putting money into this 401k and their IRA, and they're like hoping for the best. But if you want to break out of that habit and take investing more seriously, get into the habit of checking on your money. You can set calendar reminders where the first day of the quarter could be your time to check your investments. It's whatever works for you, but let's not make it where we're just not looking at it at all. I know some people don't check it because they're worried about what's going on in there. They're trying to like avoid it. If I don't look at it, nothing's happening, right? So people have that approach, but we want to break out of that as well and just rip the band-aid off and see what's happening. One, because you can't fix what you don't acknowledge, right? If you don't know that something is not doing well and you need to fix it, how do you, right? If you're not looking at it, how do you know? You know, so it's really important to, again, keep a pulse on your money, because again, no one's coming to save us. They're not, right? So we have to kind of do our own due diligence and be our own saviors so future us can live well. So I don't see any questions. I'll give you guys a couple of seconds here if you have any questions. Let me check on YouTube. Nope, I don't see any questions. Let me check Instagram. I had a few people in and out earlier, but I don't recall that I had any questions. I don't think I did. And my throat is killing me right now. Too much talking, apparently. Okay, I don't see any questions, but if you're not subscribed to my YouTube channel, check out the link in my bio and head over there. I do go live on YouTube a lot more often than I do here on Instagram. And if you're on YouTube, you can follow me on Instagram as well. I do post in my stories pretty much every single day, and we have conversations on different topics. So feel free to join me over there as well. So I don't see any questions. So have a good night, guys. I'll talk to you all soon. Take care.